I'm starting to record this lesson. Okay, let's. It's quite simple, really simple. And what I really like about this strategy is that your risk is always under control. Let's open the C-scalp. Just a moment. We trade in this strategy. We trade only in-play instruments. We open the C-scalp screener, and we see only in-play instruments, leaders of growth, leaders of fall. Let's, for example, open up HNT and people. HNT and people. Just a moment.
I can't see your screen.
Sorry. Yes, sorry. I will share. Just a moment. In fact, all the elements of this strategy you already know, we will just structure it in the trading system. Just a moment. Okay, we open C-scalp. We open two really active instruments. People and HNT. The really good advantage of this strategy is that here we trade small zones. The plot of the strategy is trading 1 minute zones, but here we don't use a TAS because it really takes much time. But instead of this, we just take a risk, hoping for the really good win rate strategy. We open people, we trade only 1 minute time frame, and we watch the zones. Let's see. For example, I will show you. Okay, people. We open people. We watch the really good zones. I don't see here very clear ones, but anyway, for example, it could be this one zone, the second zone, but there is a double zone. We skip this. Let's, for example, open HNT. Some loading problems. Why it doesn't open? Okay, never mind. Let's take another one. For example, big time. Yes, just look at this. Here on one minute time frame, we turn to 1 minute time frame. This big time instruments was on top of growth, and what I see really good, almost ideal order block. As you see, order blocks, thresholds, and so on, other types of zone. You see here, it's quite really good. There are no inclined levels by that moment, and so on. Here we see that we have really good order block. I think you know how to mark it. So we mark order block. We do not go to a test. We just mark it. And what is the most important part of this strategy? So we marked it. We stipulate it, for example, with this figure. And what next? We should calculate our stop buy trade. First of all, I think you remember this formula. We have 0.8%, yes, and of course we add 0.2 for this is 0.8 our zone, plus 0.2 for our stop loss. That will be somewhere here, stop loss, from where we wait the first approach and the pullback. I am showing you on the history. I already worked out this situation quite good. What next? Let's imagine your deposit $50. you have $50 deposit. Okay, and your daily drawdown will be when you stop trading will be 10%. 10% for from $50 is $5. $5 is your limit for a day. $5.
Yeah.
And taking into account that your day draw is $5, you should calculate what will be the stop loss for each trade. For each trade, let's imagine, as far as we have really good win ratio, there will be 5 stop losses. 5 stop losses by $1 each. $1 for each trade. So our stop loss will be every time independently on the zone size. Our stop loss per trade will be $1. So we calculate. We, for example, have this zone. We have 0.82 plus 0.2 for stop loss. It's about 0.1. So how we calculate? There is a really simple fixed stop formula. Fixed stop formula is $1 of your daily stop per trade divided by 0.82 plus 0.2. It's about 0.01. We just multiply this parameter to 100 and we got 1%. So we got, how much we got? Just a moment. $100. Your entry will be for $100. Oh, sorry, I made a mistake. I think. There will be 0.1. There will be, just a moment. I'm overworked for today. No, that's okay. The first option was right. $100 your entry size. There is a fixed entry size that you placed just here, and simultaneously you place $100 for purchase here just on the border of the zone, and here where the stop loss you place another pending order for 100 for sale, or you just place stop loss when it's activated. Because I really recommend you to place in advance for $100 for purchase, $100 for purchase, and $100 here pending order as well for sale, because sometimes there could be market news, something else, and we will have a squeeze, and we fail to place a stop loss. So that's all the arguments. What is the most important advantage is that you every trade you are ready for $1 loss. There will not be surprise. There will not be squeeze. There will not be minus $20, minus $50. What sometimes really scare traders is the unknown situation when you have a stop loss. When you do not know your potential loss, there is a higher risks for tilt. In this trade, in this strategy, you always control your risks, you always control your stop loss, and so on. So you have 5 zones in a row. You have to lose to have 5 stop loss hits in a row just to go to daily drawdown and stop trading. And even if you do, this $5 will be not critical and you will still be alive, and you just continue next day. I think it's clear. When we activate our limit order, we have a pullback. We are fixing by the same rules, fixing every 0.4, 0.6, and so on. And when we have 0.6 or 0.8, we place stop loss into break even. That's really, really simple. I think it's clear, and
Yeah.
I
So we don't check for volumes.
Yeah, we don't check for volumes. We're just watching the zones, and we trade out only the first approach, only the first. Even though this approach, I was expecting this movement when we have a entry point, and as you see, really good potential to break this inclined level. That happened, but I was stopped by stop loss because I was my entry point was here. I was expected the uptrend movement from here to break this limit order, to break this inclined level. But unfortunately, we corrected to my entry point, and there was a stop loss hit in break even. But anyway, there was a really good profit. Anyway, we shouldn't enter again here because there was the first approach to this zone. The second we do not consider. Let's try to find something. I really like this zone. As you see, this zone. Let's imagine, for example, you have still you have $50. You have $1 per trade stop, and let's calculate 0.72 plus 0.2. There will be 0.9. So we divide $1 by 0.009. There will be $111. $111 that we place just here, for example. We place it here. Let's imagine we place it here, and somewhere here we place the analog for stop loss. That's all we need, because of course you should understand that no early entry. No early entry. Sometimes it behaves something like this, as you see. For the first time,
Yeah.
I was really unhappy because it didn't came 0.18%. By that moment, I already made a decision not to participate in this instrument because there was too close approach. But anyway, here I took a risk and there was a payoff, as you see. Sometimes it behave like this, and we shouldn't bite for this, because all we do now is the automacy. All that happens from this moment is absolutely automatically. When our limit order is executed, all the events that following after this action will be automatically. We have either stop loss or we fix the profit. That's all we should do.
Yeah.
Let's try to find something as well. So we go to on 1 minute. I see here, I see the zone. Let's try to measure it. I will maybe there will be 0.8 plus 2. Let's imagine, for example, we have $100. We open the trade for $100. We will try to it's better to do it in advance. So
Yeah,
here
on a 5 minute time frame, zones are bigger and
yeah.
stop loss is
So
painful.
we have about 0.8 plus 0.2, there will be 0.1, there will be $100, yes, because 1 divided by 0, 0.1 will be, yes, 100. So we entered here and we have a stop loss here, so we wait, and then we will be fixing according to all the rules, for example, by $20 here, and the take profit somewhere on the over high 40.90, somewhere here. That's all. Of course, sometimes we will have stop losses. That's okay, that's normal, but in most cases I think you will elaborate your own experience. You will be easily distinguish good zone from bad zone, especially taking into account that you have already good experience in this.
Yeah.
And you have about 5 or 6 zones in a row to be stopped you in a row to have a day drawn.
Yeah, so zone, it shouldn't be more than 1%.
No, it could be. In fact, it could be. You just if the zone is more than 1%, you could participate in this. But according to formula, your loading position just will be lower.
Yeah.
For example, if we have 1% zone loading 100 zone, if you will have 2% zone, you will be loading $50. That's it.
Yeah. Okay.
Of course, we watch BTC. BTC is okay. We watch as well the fundings. Where are the fundings? The fundings are in a 1.4 hour. That's okay. So we are just waiting for the zone to work out. This strategy really saves you from a tilt. Let's watch other zones. We open any screener. We just see any instruments that are flying, just skyrocketing big time, MTL, HNT, rare. Okay, MTL. Let's watch. Of course, it will be even more professional if you watch on the history how this instrument, how this certain instrument work out the zones. If it does, that's okay. We open 1 minute time frame. What do we have? We have no zones, but here we are forming the order block. Maybe there will be a zone after some time. Maybe there will be a zone. We will watch. It's still forming. So let's calculate. I want you to calculate 0.28. If you have $50, what will be your loading size? Approximately.
Sorry, I can.
I'm showing you the zone. It's now forming the order block, as you see, and it's about 0.28. What will be your loading size, if you have a deposit as $1 per trade loss?
Yeah, so we at 0.20. to the zone about stop loss, and we have to divide
Mm-hmm.
uh,
$1 by
$1 by 0.01, I think.
not 0.1, but 0
Yeah, 0.1.
0.005, because we 0.28 plus 0.2, it will be approximately 0.05. It will be,
We
yes,
divide to the zone. Yeah, yeah.
it will be $200, for example, and let's try to work it out. The big time is still in position.
But the zone is too small. If
Uh,
that's a problem.
Yes, that's not a problem for 1 minute time frame, especially when the instrument is in play instrument. That's okay. So we place 132 and we place 131, a kind of stop loss. What we have on a big time? The big time almost went out from the zone. What is your deposit now?
I add $200.
Okay, for example, let's calculate for your deposit. Let's calculate for your deposit. Let's take this zone. We have again 0.27. So we have deposit of 200. So we have daily drawdown about $20. We have stop loss per trade will be $4. And for this situation, let's calculate $4 divide by 0.27, but we add the 0 because we are multiplying it by 100. You will get used to this. 0.27 plus 0 plus 0.2, there will be about 0.5. So we divide by 0.005. So we divide, how to understand whether you're right or not, just multiply this number by 100, 1, 2, and there will be 0.5. That it means that we are right. Your entry position will be $800 for X leverage. Oh, sorry, $400 will be you are placing it here with a stop loss here, and that's all. Oh,
yeah. So
almost.
I have to use 2 level.
We were activated, as you see.
Yeah.
And we fix by small parts. Trying to evaluate the potential just inside the trade. But anyway, the order block looks really good. I think it worked out at least to 0.5%. Watching the BTC.
Can we use another strategy with densities with this strategy?
I think it will be not so reasonable because when we trade the pullbacks from, but you can, but in fact I don't know how to calculate it in this case, because when we have the pullbacks from densities, we have several limit orders for loading. If you will use just one limit order, it will be reasonable, but it's much more reasonable to have several limit orders, because sometimes price doesn't reach the limit order itself just to the closest distance. Sometimes it reverses several 0.2% before the limit order and so on. That's why we spread the limit orders before this size.
Yeah.
The big time is exiting the zone. Here we already went out from the zone on MTL. We fix the first part and we wait. Big time is creating a chainsaw effect. I do not like this. But anyway, we are still waiting for the price.
What is mean this effect?
When we have a kind of chainsaw kind of movement of the price, I mean something like this.
Yeah.
In MTL, I am expecting to renew the previous highs of 1.5217. Let's wait. We can place a stop loss in the break-even point. In big time, we are still waiting. Sometimes several zones could hedge each other, as you see. So we closed a half of the position, our stop loss in the break-even, so we can place a take profit on 52.20, somewhere here, because the potential here is about to to renew the previous high, and we almost reached the potential. As I said, 0.5, 0.6%.
This movement, it's not so good.
Yeah, not so good. So I really probably I will close it in small plus, because it has a downtrend movement, as you see.
Yeah.
Or maybe it will be just a stop loss. That's not a problem. There was a stop loss hit, as you see, and MTL worked out this situation perfectly, as you see.
Yeah.
That's how it works. That's how it works. It's absolutely easy and really good. But the most important thing is that you should follow the main rule, not to load in advance, just wait, just stop trading when you have daily drawdown, and so on. And everything will be okay if you follow these rules through all your trading sessions. Your deposit will grow.
Yeah. So you tested already
Yeah,
the
yeah.
strategy, and it worked like another zones
Yeah,
strategy.
Vladislav, the other co-founder of Smart and Skilled, made $900 from $5 using this strategy. Almost 1,000 from $5.
Oh, I want the same result.
Yeah, that's quite absolutely real if you follow all the rules. There maybe will be a stop loss hit, maybe not. But we do not add the position. We do not add. We just wait, either will be stop loss or fixation. Because
Yeah.
here we will have $1. Here we will have $1 loss. We are ready for that. And they will be psychologically comfortable for us. So I think there is that's all for today. I think the strategy is quite simple, but I will stop the recording